Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
AAA, I had a client call me the other day, and this is a very successful guy. And someone in his life said that we're going to purchase some of this Bitcoin. And I want you to do these things. And he was all kinds of confused. What was going on, what they were talking about, how to buy Bitcoin stock, how to do this and how to do that. It's a company, it's a name brand, right? It's confusing stuff. Everyone has a different view of it. And this is a really intelligent guy, very successful guy. And he is just trying to figure out what is going on with this thing called Bitcoin. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy. And today's topic is Bitcoin Revisited. And so, Daniel, I'm excited about today's show. You know, we have clients that, people that who are now clients that came to us because we did a show on Bitcoin in the past. And anybody that's interested in that can go to any place that listen to podcasts or on our website and look that show up. But, it's time to revisit it, right? Because things have changed since we did that a couple years ago. And, it's time for us to get back into things. And, people are asking questions. We've had a lot of things happen, right? Like we got people into Bitcoin. We knew some things were going to happen with Bitcoin when it became available to the general public, that it was going to just escalate even more than it had. And that happened. And we have a lot of happy clients because we were proactive in that and jumping on that ahead of time. But now there's some new opportunities that are coming, right? And, one of, what's, so let me ask you a question, Daniel. What's Bitcoin? And should we care about Bitcoin? Let's get very basic.
Yes, we should care about Bitcoin. Investors should care about Bitcoin. Bitcoin is...
Okay, next topic.
Exactly. Bitcoin is a digital ledger, right? It's a digital ledger. And why people should care about it is because we live in a digital world.
So a digital ledger. So let's just, when you say ledger, what I'm picturing is, back in the old days, Matt, my son Matthew, who's studying to be a CPA, doesn't even know what one of these things are. He saw one recently and he said, "What in the world is that?" But a green piece of paper, ledger paper, that you keep track of different columns and different things like that. Is that kind of what you're talking about? Okay.
Yeah, that's what Bitcoin does. But it's worldwide, right?
Okay.
It's worldwide and no one can edit it. No one can edit what's already been done. So no government.
It's on the paper. It's on the paper. Like,
it's not on the. Yeah.
I mean, it's as digital. If it was on the paper and you can't erase it.
Yeah. Right? No matter how much power you have.
There's value on that paper, right?
Yeah. And it says who owns what. You can put information in there. So people are putting Bible verses in it, for example. It can never be edited.
Wow.
Okay. So people can put text, but what it's mostly used for is transacting, like this person owns this person owns this person owns this person, and how much, right? And anyone can be a part of that, either storing that information. So there's copies of the ledger that I can hold and you can hold and someone in Africa can hold. So there's not one database that can be hacked.
Okay.
There's not one entity that can shut it down. It doesn't matter how much money you have, how big of a government you are, you can't change the ledger.
Okay.
It's in the people's hands.
So I know this is like a little bit off track, right? But I'm just trying to get this straight in my own mind here. Okay. So we're talking about Bitcoin, right? And this is called Bitcoin Revisited, not digital currency revisited. But digital currency often works in this same fashion, just different ledger sheets, so to speak?
No.
Okay.
When we are talking about Bitcoin,
totally
we're not talking about anything else.
Okay.
Bitcoin is so that's a great question. I think that's one of our points for today. That's one of our points. So we're going to get into it more.
Okay.
But
all right.
But that's a really good question, AAA. And the story I talked about at the beginning of the show, that was one of the points, is you need to forget about all other currencies. We're not talking about that. Bitcoin's completely different. None of the other ones are competing to be Bitcoin. They all do other things. It's too complicated to get into that. So Bitcoin is not crypto. Bitcoin is its own thing. And what makes it special is the network. Okay. It's called proof of work instead of proof of stake. And so proof of stake is kind of the system that we're in right now, right?
Okay.
Where the people with the money make the rules.
Okay.
Right?
Yeah.
If you're big financial, if you're big pharma, if you're big medical, you go with your big pocketbook to Congress and you tell them what to do. And if you have the right incentive for them, it will become law. Right?
Right.
That's how the current system works. And that would be considered proof of stake. The people with the most money make the rules. Proof of work, which is what Bitcoin is, there's work to be done to verify the authenticity of every single transaction. And to compete, to do that, you have to expend power. You have to expend energy. So there's no free lunch. There's people competing to secure the network, to secure their assets. And the more people that compete for that, the more difficult it gets. So for an example, if gold went to $50,000 a coin, everyone would become a gold miner, right? There'd be a lot of people that would come on to search for gold. And what would happen? We would find
that's
more
what happened
gold.
in California, right? With the gold rush and everything. Right.
Right.
Okay.
But we'd add more value to technology to find more gold. More people would get interested in gold, and we'd find a lot more gold. So right now, about 2% every year comes into the gold supply, right? If it went to 50,000, we just find more gold. Or the tulip bulb mania, right? People compare this a lot to tulip bulb mania. Well, if tulip bulbs are the same price as a mansion on the canal, we're going to make a lot more tulip bulbs.
Right.
We're going to find a lot more tulip bulbs. We're going to dye a lot more tulip bulbs, right?
Okay.
So the proof of work basically means that there's an algorithm. So there's people competing for the Bitcoin coming into the system. And the more people that compete, the harder it gets. So you can't add more hash power. You can't add more compute to make them come any faster than what they do. It just gets harder and harder and harder to mine it, so that there's the same supply coming in that's programmed the mathematical algorithm.
So is it kind of like supply versus demand, supply and demand kind of thing?
Well, that's what drives the price. But typically for most things other than our time, the more supply there is, or the more demand there is, we just create more supply. Correct?
Right. Okay.
And it fixes itself. With this, it's a mathematical supply.
Right.
That decreases every 4 years.
The supply decreases every 4 years?
The supply is decreasing every 4 years.
Okay.
And so the supply, so it doesn't matter how much demand there is, the supply will not increase any more than what's programmed. So everyone has the same everyone has the same information. They can see this mathematical equation to see what the supply dynamics are and how that's decreasing every 4 years, which we'll get into in a little bit. But it will not increase because the demand increased. So what does that do? That drives the price up, right?
Right. Exactly. But you were talking about the work. What did you call it again? The work what?
Proof of work.
Proof of work. So my question was, is the proof of work kind of like supply and demand? But it's not. Right.
The proof of work is what's bringing the supply in. So there's there's the compute, right? And they're competing to solve this algorithmic puzzle.
What happens. That's what happens when you're mining.
Yeah, exactly.
Bitcoin mining. It's competing to do this, to figure out this thing.
This
and then
hash rate, exactly.
It brings it in. If you're a miner, it brings it in underneath your
If you win,
thing.
Yeah, if you win, right, you get the block. You get the block of rewards, which right now is 6.25 Bitcoin. So you just got a substantial payday, right? If you got the 6.2 Bitcoin.
Yeah. That's a lot of money. That's a lot of money. That's like $350,000 or something. 400. There's over $400,000 right at the moment. So, okay. So that's kind of like the proof of work is, if I might, this is what I'm getting, right? Is that it's proving that it was that you worked to be able to get this stuff because you mined it.
Right. That's exactly right. There's work that's being done to prove every transaction, right?
Oh, work that's being done to prove every Oh, okay. That makes sense.
They're competing for that. That's a big reward. So everyone's competing for that. So the more that they're competing, the harder it gets.
Mm-hmm.
The harder and harder it gets to get that reward.
Yeah.
And which makes it harder, which makes it more valuable because it's getting harder and harder, which means there's more energy going into it. There's more work going into it. There's more technology going into it to figure out these puzzles, which drives the security of the network to get stronger and stronger, which makes it harder for these governments or these people with big money to change the rules, right? Because the work is getting harder and harder and harder. So it doesn't matter if you have this huge amount of money, you can't change the rules because you can't change that compute power. You can't change the amount of work that's being done to solve these problems.
Okay. All right. Cool. Well, wow. So we're talking today on financial strategies with Andrew, Daniel Agemy. This father and son teams come together today to educate you and how Bitcoin works, right? Bitcoin Revisited is the title of today's show. And we're glad that you're joining us and talking to us with us today. But we have a book that goes along with today's show before we go to break that we want to be able to give to you to be able to understand this a little bit more, a little bit better. This is different books than what we've been out in the past. This is called Inventing Bitcoin, the technology behind the first truly scarce and decentralized money explained. And so we love to put this into your hands and give this to you so that you can have it and read it and understand this a little bit more for those that you are interested in it. But call us 800-725-7616 for your free copy. No obligation for your free copy for the next 5 first-time callers. 800-725-7616. Call now.
Important financial question. Are you feeling confident that you have enough money saved to enjoy a stress-free retirement?
Honestly, I'm not sure.
That's where Retirement Income Sources investment advisory arm comes in. We exist to help you invest your money smartly.
I'm struggling to accept my retirement without a steady paycheck. So can you help me invest into a profitable revenue plan?
Absolutely. We have top advisors nationwide who have a fiduciary obligation to you, helping you generate retirement income.
This is Financial Strategies with Andrew and Daniel Agemy.
AAA, everybody remembers the first time that they heard about Bitcoin. And if this is someone's first time, then you'll remember this time because usually people hear about it. It happened with me. It probably happened with you. And you think that this is a too good to be true story. This is a Ponzi. This is Beanie Babies. This is Madoff. This is the tulip bulb mania, right? And you forget about it. And then a few years down the road, it's in the news again because it's hit an all-time high. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Daniel and Andrew Agemy, this father-son team coming to you to be able to help educate you. So, because we believe a educated retiree is a happy and stress-free retiree. Today's topic is Bitcoin Revisited. And we talked about Bitcoin probably a couple of years ago, but now we've got a new book and we got a new show, and glad that you join us. So Daniel, we talked about this in the first quarter of the show, and we talked about Bitcoin, but now the question is, what I'm sure is crossing everybody's mind: is it safe? Is it legal? Right? Nobody wants to do. Well, a lot of people don't want to do what's illegal. So how does this fit in that category?
Well, is it safe? And safe is relative, right? So safe is relative to what? Well, this is mathematical. You can understand it mathematically. No one can, is the US dollar safe, right? A lot of people would say yes because it's stable and they can hold it in their hand and they can see it. But they are stealing your dollars every day because they're creating more of them, right? So is that safe? So safe is relative, but I would say it's safe in the fact that it's mathematically verifiable. So you understand what the supply is, you understand how much you own, no one can delude you, right? No one can steal it from you if you hold your keys. Now, where it's not safe is if you have it in a hot wallet, right?
Okay.
So that's like we've talked about how banks own your money. Well, if you own this even if it's a good exchange, right?
Mm-hmm.
You own this at PayPal, or you own this at Coinbase, or you own this at another custody. Well, you're relying on them to hold it from you. You don't actually own the physical key.
Right.
And so they can steal it, they can lose it. It could be confiscated from them by a government.
Right.
So people get that confused with actual Bitcoin. Whereas if you own the Bitcoin and you have the keys to the Bitcoin, it cannot be confiscated from you.
Yep.
No one can approve your transactions. So no one can say, Andrew, you drove too much this month and you had too much carbon emission. So your money will no longer work.
Right.
Because this is a peer-to-peer transaction, you can still transact and there is no middle mediator saying that this is approved or this is disapproved. No one can shut your wallet off, right? If you own the physical wallet, the physical key, compared to having a custody hold it for you.
And, but also the mutual fund, right? Because, you're going to get into that. Mutual funds have
the ETF.
Bitcoin. You don't own that either. So, there's a couple of ways from that angle, but,
well, that goes to the second part. Is it legal? Well, it has not been legal. No one has said that this is a legal thing. Just like the internet at the beginning, no one said it was legal. And if they went and asked to make it become legal, we would not have the internet, right?
Right.
Because no one would have approved the internet.
Right.
So just like the internet wasn't legal until it was legal, this was not legal. There was no one saying it was illegal, or China tried to ban it a couple of times and people didn't do it and they unbanned it. The thing that's made it the most legal so far is there's a couple countries that have purchased it. There's one country that actually has it as legal tender of money. And then the SEC just approved 11 Bitcoin ETFs. So that's the closest thing to say that it's legal is the SEC has approved. They're not saying that they want you to buy it. They're not saying anything, but they have approved ETFs. So you can go and you can buy this in your brokerage account.
Right. Cool. Very cool. All right. So, so I guess the question is it illegal rather than is it legal, right? Is it illegal? No, it's not illegal.
It's not
right?
illegal.
And has it been deemed legal? Well, the closest we come to that is with the SEC saying that we can put it in ETFs. So, all right, good. Very cool. And safe, safe, like you say, safe is a relative term, but there's risk in everything. Right.
There's risk in everything.
The question is, what are the risks and what are the rewards? Right. So this, a well-diversified portfolio and everything is going to have potentially some of this, but to offset some of the risk it has, you have other things to offset it. So that's cool. And, when you're talking about that hot wallet going bad, that's exactly what I did. I had a hot wallet. I had Bitcoin that I owned in a hot wallet and it went bad. And when I finally did get it back, and now I got it back, but it's not worth what it would have been worth if that didn't go bad. And I got to believe, and you're probably going to tell me if I'm right or not, but I got to believe that what the difference is that they took that piece that they didn't give back to me, and that helped pay for the bankruptcy of the hot wallet that it was in. Am I on the right track with that?
Two things. They did that and they spent your Bitcoin. Same thing, like people have heard of this guy, Sam Bankman-Fried, right? Who stole all these people's business. And he actually affected the last cycle because people thought they were buying Bitcoin on his platform, FTX, and they weren't. They weren't buying Bitcoin. They were just saying that there was Bitcoin. And so people say, a lot of people have said, well, I thought Bitcoin went bad because like this guy, Sam Bankman-Fried.
The hot wallet went bad. Yeah.
It didn't. It did not change Bitcoin one bit. The network never slowed down and never changed. All this fraud did not change the actual network. What it did was the person holding it for you, there will always be crooks. There will always be bad people in the world. It didn't change the network. What it did was it exposed a fraud who was telling people he was buying the Bitcoin for them when really they were spending it on houses in the Bahamas and things like that instead of buying the Bitcoin.
Okay. All right. Well, you're a smart guy, Daniel. Glad you're going through this. Well, you're listening to Financial Strategies with Daniel Agemy, this father-son team coming to you to be able to talk to you about Bitcoin Revisited this week. And we have a paper that we'd love to be able to give to you that goes along with today's show. Is actually from our blog show, Pros and Cons of Holding Digital Assets in a 401k. So we'd love to be able to put this in your hand for free. Call us at 800-725-7616 for your free copy. Pros and Cons of Holding Digital Assets in 401k. 800-725-7616. Well, now, Daniel, as we move forward, we got a lot to cover, man. And as we move forward, are we good with are we ready to go onward with this or what?
I think so. Yeah. Yeah. Okay. So we talked about what Bitcoin is and should you care about it? And then we've talked about, is it safe and is it legal? And how has Bitcoin done so far? Pretty good.
Yeah, indeed. And it's going to get better soon, right? So anyway, before we get into, I'm jumping ahead, but how has it done so far? You know, I like how were able to recognize all these things that you were saying in advance years ago. And we told our clients and those certain clients, because we didn't make this available to everybody because they needed to have a certain size portfolio to be able to do this. And we made this available to them. And then they've been able to make significant money. I mean, a lot of them that I'm thinking of doubled their money on the Bitcoin. And, you know, but it was just a small piece to hedge their bets, you know, so to speak, you know, to help hedge and diversify their portfolio. But, you know, that's done really well. Then, you know, now we've got this to where what's going to happen too. I don't know if you want to include that in here, right? Because now that it's in ETFs, that's gonna do a lot.
Yeah. So how has it done so far? Well, it depends when you got into it, right? And the interesting thing is we talked a little bit earlier about that halving cycle, right? Every 4 years, the supply cuts in half. So in the beginning, in 2009, when it was created, there was 50 Bitcoin coming in to the network every 10 minutes. And in that first cycle, it got up to a high of about $32 a coin, not $32,000, $32 a coin.
Oh, the $32. Okay.
Yeah. $32 a coin, right? So that was the first halving cycle. And then it crashed down to $2 and people thought it was dead. And typically that's when a Ponzi would be dead. That's when a euphoric bubble
like
is
the
dead.
Tulip Mania,
like the Tulip Mania, or
Mania,
or it's dead.
Cabbage Patch Mania. Yeah.
Exactly. It's dead. It doesn't come back. Well, builders kept building. People kept working. The network kept getting stronger. And it went from $2 into the next halving cycle, which was in 2012. So after the halving cycles, the supply cuts in half. So the miners' rewards cut in half. And that's when we go into these euphoric phases. And that's not necessarily Bitcoin that has euphoric. It's people. Human beings get euphoric. They watch this thing go from $2 and it goes all the way up to $1,100 a coin. That's enormous returns, right? And people, and we go past the fair value of the asset because it wasn't being used for anything. It didn't have a lot of value. The network was not that strong, right? It could still die. But people got so euphoric, they drove it way up past its value, its fair market value, and then it crashed down. And it crashed down to somewhere in 2015 around $150 a coin. And again, that's when a euphoric bubble, a Ponzi, anything would be dead. If it didn't have value, it would have died then. And it didn't die. It rose up in its next halving cycle, which happened in 2016, and it went all the way to $20,000 a coin. And you can see this is every 4 years, and it's related to the presidential elections, the cycle of the presidential elections. So you know when the halving is going to happen. Okay. And you know that the supply is mathematically going to cut in half. So it went from 50 to 25 to 12.5 Bitcoin coming into the system, the miners' rewards, about every 10 minutes.
Okay.
Okay. So most people knew of when it hit 20,000 a coin. They heard of it because it was all over the news, right?
Uh-huh. Right.
And then it crashed down to about $3,200 a coin. And then we had the next cycle, which was the 2020 to 2021 cycle, where it got all the way up to 69,000. And I think everyone knew about it when it was at $69,000 a coin. And it dropped down to 17 at its low, and it had to do with a lot of fraud in the system. It got all that fraud out. It got Sam Bankman-Fried, that thing where you were saying you had an account went bad. It got all those fraudsters out because it went all the way down to 17,000. And some of our clients got in around that area.
Mm-hmm. Mm-hmm.
And now it's back up over $70,000 a coin. And we have not hit that halving yet. And so that euphoric stage usually begins after the halving, where it goes from under fair market value or close to fair market value to way above fair market value. And so we're right around the all-time high, a little above the all-time high as we're talking today, or the previous, I should say, all-time high from 4 years ago. And we're getting ready for that supply to cut in half from the 6.25 currently to 3.1. But the demand is still coming in, and there's more demand than ever, which we'll get into next.
Okay. Very cool. Wow. And so this halving is coming up within the month, you said.
Depending when people are listening to this, it's either about to happen or will have already happened, depending when people are listening to this.
When it airs. Okay, great. Well, you're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. We want you to know this stuff. So we're talking about Bitcoin and revisiting Bitcoin today. Bitcoin Revisited. So we have a book that we want to give you before we go to break. It's a different book than what we've offered in the past from this standpoint. And this is a book that will help you a little bit easier to read and help you understand the technological side. Inventing Bitcoin. Inventing Bitcoin. Yours for free by calling us at 800-725-7616. 800-725-7616 for your free copy. No obligation. Inventing Bitcoin. Call now.
Do you have any questions for me about retirement income source?
I just want to make sure I can invest well enough to have enough income, enjoy my retirement.
We build a custom retirement plan based around your income and goals.
How do I know I can trust you?
Building trust does take time, but our investment advisory arm is comprised of fiduciaries, which means our obligation is to you. So you can enjoy your retirement. It's a little more income stability.
I'm in.
That's 2 out of 3.
This is Financial Strategies with Andrew and Daniel Agemy.
There are a lot of misconceptions and false ideas about Bitcoin. One of them I hear very often has to do with people saying that I thought the whole point of Bitcoin was it was anonymous and no one knows who you are and you can do whatever you want and you can hide your money from the government and you can do illegal things and no one can stop you and you can do drug trafficking and you can do all these illegal things and no one can catch you. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies. Then your Daniel Agemy, his father, son team coming to you to help you to understand and to know what you don't know so you can make good financial decisions. Today's topic, Bitcoin Revisited. Wow, Daniel. So what's the truth of the story?
Well, the truth of the story, and the CIA, the FBI agree with this because they've come out and said this. If you were a drug dealer and you were trying to use Bitcoin to get paid for your drugs, you're the dumbest Bitcoin or you were the dumbest drug dealer because it's all traceable. So it is not anonymous. It is pseudonymous, meaning anonymity means we don't know who you are. You're private. You're hidden. People cannot find that information.
Right.
Pseudonymous is you can hide your identity in some way, right? Not the transaction. So we talked at the beginning, this is a ledger. So all transactions are public. You can look up any transaction. You can verify any transaction. You can see where transactions went. You cannot change them, but you can view it all. What you can do is you do not have to connect your real identity to your online wallet.
Okay.
And so that's the pseudonymous nature of it. There's a lot of people who try to figure out who these big wallets are, and you can figure that out. So for example, if a government wanted to figure out who that wallet belonged to, they could look at the bank records and they could see where the money came from on the exchange to buy it, and then how it transferred from there. So it would be difficult to figure that out. But I mean, the CIA, the FBI definitely can figure out who owns what wallets, right?
Right.
There's Bitcoin mining. There's miners' wallets that no one knows who owns because they're mining this Bitcoin, and it's coming into a wallet, and it's called clean. No one's ever touched it before, right? They get the rewards, and it goes into a wallet, and it's not tied to anyone's name. But as soon as you start trading or making transactions, or you buy money from your bank account and you move it to your wallet, then it's able to figure out. So it's, again, pseudonymous. Your name's not connected to it, but it's not anonymous where it's not able to be figured out how that works.
Okay. All right. Good. Well, so it's kind of like a computer, right? Because you have a thing on your computer where people can know where you are because of that address on your computer.
Exactly. Yeah.
And they may not know
your
who
IP
owns that
address
computer, right? But they know that there's a computer at that address, doing something.
That's exactly what it's like. Yeah, your IP address, where it may not have your net, but the internet provider knows who that is. Someone who knows how to use the internet well can figure out who that is, right? Okay. Exactly. Okay. But the regular person can't just see this as your computer. Yep.
Okay. All right. So what do you think? Did you think you've answered that question thoroughly as far as how Bitcoin has done so far? I mean, you went through the cycles and you told us where it came from, right? And where it went. And, the original, what we said in our previous Bitcoin show was, the original time, the first use of Bitcoin was to buy a pizza. And, today that whoever bought that pizza cost them like millions of dollars.
Hundreds of millions.
Hundreds of millions of dollars. So, but that was needed.
But it was part of, exactly, right. Because that was the first transaction for value. So that was the first transaction so a pizza was X amount of Bitcoins. When these numbers we're talking about, the first price was $32 and it dropped down to $2 a coin. But there was no price before that pizza because no one had ever transacted value.
Right. So very cool. Good. Well, you're listening to Financial Strategies. Thank you, Daniel Agemy. Today's topic is Bitcoin Revisited. We have a paper that goes along today's show that we'd love to be able to put in your hand, and it's called Pros and Cons of Holding Digital Assets in a 401k. You can do that now. That's just become available recently, and we're going to be talking more. We've already talked a little bit about that, but you could put 401ks digital assets in a 401k. Most people can't, but we know people that can or will be soon. And so with that, that is the idea, or at least with IRAs. So we have this paper. This will be able to help you understand it a little bit more. It's called Holding Digital Assets in Your 401k, and can have that by calling 800-725-7616 for your free copy, 800-725-7616 for your free copy and no obligation. Call now. Listen to Financial Strategies. Today's topic, Bitcoin Revisited. All right, Daniel. Well, how can people invest in Bitcoin? So that paper we're giving away is talking about digital assets. Really not available yet in 401ks, but
it's available in a lot of 401ks. Yeah.
Oh, it is. Okay, great. So anyway, tell us about that. How can people buy and invest in?
So that goes back to the original story, right? With the very intelligent guy, the very successful guy saying, "How do I buy Bitcoin stock?" And it's not a stock, it's not a company, it's a network. It's a network that anyone can participate in, right? The miners secure the network. Nodes can keep a copy of the ledger. So we talked about it being a ledger that no one can change, and anyone who wants to can have a copy of that to make sure it doesn't change. So if half of the world lost electricity or had a nuclear, situation. The other half would still we'd have bigger things to worry about than Bitcoin. But the other half would still have the ledger and it would not be changed.
Yeah.
So how do you own it? Well, there's not a stock, there's not a company, it's the network. And so you can go to an exchange and you can buy.
And there's not coins either, even though it's called Bitcoin, it's not a true coin.
Correct. It's on the ledger. So the ledger will say that this wallet, again, it won't have your name attached to it. This wallet owns X amount of Bitcoin. And so the whole network knows that, and no one can steal it from you. No one can take it. Now, what ends up happening is you need to do your own security for that. And a lot of people don't want to do that. So what they end up doing is they buy it on an exchange like Coinbase. So Coinbase wallet owns that Bitcoin. And that Coinbase says to you, you own this much, and they show you how much you own in your account. That removes a lot of the benefits of owning the Bitcoin. You still get price exposure, so you can watch number go up, right?
Right.
But you don't have the benefits where you can transact without permission or without Coinbase being in existence, right? Mm-hmm. This new thing that we've been talking about is the SEC just approved ETFs, a lot of ETFs. So BlackRock has one, Fidelity has one, Franklin Templeton has one, and a bunch of other ones. But those are some big names probably people listening know. And so you can go and you can buy this in your brokerage account. When you buy it, Fidelity or BlackRock or whoever it is goes out and they buy the actual coins, or they buy the
units or whatever,
the units on the ledger, and it says that they own it, and they hold it in custody for you. Again, you have to transact now on market hours, where if you buy the actual Bitcoin through the Bitcoin network, you can transact anytime. And there's no open, there's no close, you can only transact business in these times, right? So you give up some of the benefits, but what you get is ease and you get price exposure, right? And so a lot of wealthy people, a lot of boomers, they have their money in their assets in brokerage accounts. And so this is a way that they can put a part of their money into Bitcoin, because why not, right? I hear a lot of people say, if I could have invested in the internet, if I only had invested in Apple, if I had invested in Microsoft and held on to it. So people are starting to say, well, why wouldn't I with 2 or 3% of my money? Like, right. The worst thing that could happen is I lose it all and it's 2 or 3%. The best thing that could happen is it's done what it has done, where it went, it went from $32 and the high of 2011. This was not that long ago. The high of 2011, $32 to today, it's trading over $70,000 a coin.
Yeah.
That's pretty good returns, right?
Yeah.
So people are starting to look at this as insurance, right?
And where do you think it's going to go, Danny? I mean, it's up to 70, right? 70,000.
So we went through those highs and lows, and how we go into this euphoria, and we far surpassed the last cycle's highs. Mm-hmm. And last cycle, it did not go anywhere near as high as what it has done from the previous years. So you could say this is diminishing returns, or you could say people like Sam Bankman-Fried and FTX manipulating the price actually made it not go as high as it would have gone, from the 20 of the high of the previous cycle to the 70 of that cycle, right? Which is still pretty good returns, just not as crazy as it has. So in this cycle, we have this ETF that has not been in existence, where you can call up your broker and say, I want to buy Fidelity's Bitcoin ETF, or Fidelity has portfolios that allocates money to Bitcoin, or BlackRock is saying you need to have X amount of your portfolio in Bitcoin. So the supply is cutting in half right now. Yet we have more demand because of all these ETF products and all the awareness that's going on in the world and all the use cases that are here that never have been here before. So even if you thought, you know what, I don't understand this, I don't like this, I don't even want this, you might say, I want part of my money in it just so I can get it price exposure, and I'll get out of it some other time, because you understand supply demand dynamics, and you have this inelastic supply, and you have this demand that just keeps coming and coming and coming. This isn't talking about how perfect it is of an asset for institutions like insurance companies, right? Some insurance companies have bought it because when you owe a liability way out in the future, why would you not want an asset like this that the supply can't increase? You don't care about year to year volatility. You just care in 20 years how much it's going to be worth, right?
Right.
So it gets a little crazy the more you think about the supply and demand dynamics.
Yeah. Cool. Very cool, Daniel. I like it a lot. So, all right. Well, we're talking about Bitcoin. We're talking about the title of today's show, Bitcoin Revisited, because people don't know what people don't know. Trying to educate you, be able to make smart decisions, be able to make sure that you're able to retire and stay retired. Before we go to a break, we'd like to offer you the book that we're giving away this week. It's called Inventing Bitcoin, the technology behind the first truly scarce and decentralized money explained. And so we put this in your hand for free, no obligation, by calling us at 800-725-7616, 800-725-7616 for your free copy of Inventing Bitcoin. To the next 5 first-time callers, call now.
Time for some tough questions for these financial advisors. What makes retirement income source different from other financial?
Our extensive experience generating investment income quickly so you can have financial peace of mind, navigate your retirement smoothly, and have more time to spend with family and doing the things you love.
We gotta talk to these guys. We're done here.
You're locked on to Financial Strategy with Andrew and Daniel Agemy.
The Tower of Babel in the Bible is a great illustration of people that did not have a limiting belief. Here we had these people that they said, let us make a name for ourselves. Let us build a tower to God. And they were going to do it. And God knew they were going to do it because they had no limiting beliefs. And that's why he said, well, we're going to mess up the communication because communication is the key to relationships, effective communication. And we're going to keep these guys from effectively communicating with one another. So they're not going to build that temple. God didn't touch their brains to keep them from having a limiting belief. He just touched their communication. So limiting beliefs can keep people from a lot of things. And our minds are very strong. Now, recently we had somebody come in and we were talking about adding maybe 2 or 3% of their total portfolio into digital currency, Bitcoin. And basically they freaked out at that concept. But why was that? Because of a limiting belief. I'm Andrew Agemy.
And I'm Daniel Agemy. And you're listening to Financial Strategies. And today we're talking about Bitcoin Revisited. We did one of these shows quite a while ago. I think it was around 17,000, the first show we did. And today it's over 70,000. But it's not about that. What it's about is educating people and trying to break down some of these limiting beliefs, trying to break down some of these false and misconceptions. And even though we're not going to be able to explain everything, it takes quite a bit of time. I tell the clients, I'll tell you about this. And then when you have more questions, just call me and talk to me about it, because it took me years, at least 2 years of spending tons of time doing it before I actually wrapped my head around it. And that it's the journey. It's the journey that you have to go on. For me, going from thinking it was Beanie Babies to actually putting my own money into it or putting other people's money in it, right? It took a long time. I was somebody that thought they were just like Beanie Babies and it was a fad. Fortunately for me, I had an open mind and was able to change my mind at the right time instead of a peak at the bottom and be able to buy it at a bottom instead of a top. But this doesn't mean you need to own it. And that's fine. If that person doesn't want to own it, that's fine. It's not for everybody. And some people need to buy it higher after a few more cycles. And that's fine too. People will buy it there. People like to buy things when they're expensive, not on sale. It's funny how that works, but it's true. And it's fine. A saying is, you buy Bitcoin at the price you deserve.
Oh, that's a good one. Okay. All right. So how does Bitcoin stand out according to, are we, how's it go, stand up against other cryptocurrencies?
So we addressed this a little bit earlier, the difference between proof of work and proof of stake. And that's too much to go into here. But get that book we're giving away. Get that book we're giving away, because that will explain this not from a financial perspective. It will explain how all this stuff works from either a technology perspective or from more of a mathematical perspective, as opposed to a financial. The book we've given away in the past is from a financial perspective. This is from a technologist or a mathematical perspective, and it's much easier to understand, I think. But how does it differ? No one's competing to be Bitcoin anymore. At the beginning, things like Ethereum, you hear about cryptos, you hear about all these things. There's too much to cover. No one's competing to be Bitcoin. Bitcoin is this immutable ledger, right? And it is the strongest, most secure network that has ever existed.
Okay.
And there's nothing close.
Great.
And it would be a store of value, a digital store of value, where no one can change it. No one can block you from making a transaction. It's peer-to-peer, right? None of the other ones, they all try to do special things, and there's tons of them, and there's too many to count and all this. None of them have that aspect. And so this stands alone. You can say there's crypto and there's Bitcoin, right? Okay. Bitcoin is its own thing. It would be like a digital gold. Okay. A better version of gold than even gold, right? And a lot of gold bugs are listening. They're going to think that's a crazy thing to say, but it's the digital world we live in. If you want to take $1 billion of gold to Japan or to, anywhere, you want to go to Mexico, you want to go to Portugal, you want to go anywhere, you can't do that. You can't even take $1 million of gold because you can't get it through airport. You can't get it through security. It would cost you so much. Well, this, you can transport it. You can memorize a seed phrase and you can do it in your head. You can instantly get it there by sending it on a transaction. So for the digital world we live in, we created the internet, which was this amazing thing, and we never created money for the internet. And now finally in 2009, right, there's money that was created for the internet. 2008, there was money created for the internet, right? And that's Bitcoin. So when you think about it, don't try to wrap your head around all crypto. Think about Bitcoin as one thing. It's a store of value. It's a digital store of value that can be transacted without anyone's permission, anywhere in the world, any day, any time. And the other things put in a different bucket that you're going to look at some other time when you want to, right? But they're completely different things.
Okay, cool. Well, thank you for explaining that to us, Daniel. And you're listening to Financial Strategies with Andrew Daniel Agemy. Today's topic is Bitcoin Revisited, because people don't know what people don't know. And this is just the tip of the iceberg with Daniel's doing from all his years and books and research and so forth that he's gone through. And we're glad to be able to pass some of this on to you to be able to help you understand further. And with that, we have a paper that goes along with today's show that we'd love to put in your hand for free, no obligation, pros and cons of holding digital assets in your 401k. So you're able to do that. And we want to be able to educate you on that so that you can move forward and hopefully put yourself in a better position, whatever it may be, whether it's for or against. But pros and cons of holding digital assets in a 401k, yours for free by calling us at 800-725-7616. Call now. Daniel, we've just got a few minutes left in the show. And, so can Bitcoin actually protect your money?
So going back to your last question about Bitcoin standing out among other cryptos, one thing I didn't mention, and it also goes with this next question you have, can Bitcoin protect your money? There can only ever be 21 million Bitcoin. And I guess we're ending on this because this is the most important thing. No one can increase the supply, right? It's mathematical. We know exactly how many Bitcoin are going to be created every year from now until the year 2140, when there will be no more Bitcoin coming into the system. There can only ever be 21 million. That's one of the major things that differentiates Bitcoin from other cryptocurrencies. You can't create more of it. There's 21 million. And people say, well, you can make as many as these other things as you want. Well, let's talk about picture sharing or file sharing, right? You can have it, anyone. You and I could start a company file sharing or picture sharing, but are we going to compete with Apple? Probably not. Why are we not going to compete with Apple? Because they have the market share. They have the customers, and it's convenient for your Apple phone to save your pictures. Why would you go pay money for another picture sharing service, right? So it doesn't matter how many picture sharing services there are.
Yeah.
Apple and Google are going to be two of the biggest players because your pictures can automatically save to their platforms, right? Well, that's the same thing with Bitcoin. You could create as many cryptocurrencies as you want, but it's not competing with Bitcoin because Bitcoin has this network. The hash rate of Bitcoin, this is going to be a very difficult thing to understand because the number is so big. The hash rate of Bitcoin, and that's the difficulty to get the rewards from Bitcoin.
That's the hash rate. The hash rate is the difficulty to get the rewards.
Yeah.
Okay.
So the more people who are trying or competing to get these rewards are increasing the hash rate, which makes it more difficult to get the rewards, which makes it the network more secure. So the security of the hash rate on Bitcoin from when it started till today has increased 50 trillion times. A 50 trillion X.
Oh, wow. That's humongous. That's mega big.
So when people say it doesn't have value, that's not a price. That's a security measure. That's measuring the security. So how can you say it doesn't have value when it's increased 50 trillion times? Somebody thinks it has value.
Yeah.
Who thinks it has value? There's literally publicly traded companies that all they do is mine Bitcoin. They compete for these rewards. So that's telling you that there's a lot of infrastructure, and that's how it's gone. It went from at the beginning when there was 50 Bitcoin a block, and Satoshi Nakamoto was mining Bitcoin. He was doing it on a laptop. And now there's literally publicly traded companies that all they do is compete for these mining rewards. You can imagine the compute power between one guy doing it or the inventor of Bitcoin doing it on a laptop compared to multiple publicly traded companies competing for these rewards.
Yeah. Wow.
And one thing we didn't talk about is, well, it's expensive, right? AAA, it's expensive. It's $70,000 a coin.
Right.
Or who knows what it will be when people listen to this. But $70,000 a coin. Well, let me go backwards. I'm sorry. Can Bitcoin protect your money? Well, when you know no one can debase you, when you know no one can steal your money, when you know that there's only 21 million, that can give you a lot of security. When all governments are creating money like crazy and they're stealing money out of your bank account, they're stealing money, they're creating money faster than the S&P 500 is going up. Can it protect your money? Well, it can protect you from debasement, which is something you really have to be careful of. The scarcity factor, 21 million, AAA. Did you know that there is 24 to 25 million millionaires in the United States alone? Wow. That means not every millionaire only in the US. And this is a worldwide asset. This is not a US centric asset.
Right.
In fact, it's more valuable to people in other countries because they don't have a good banking system. 21 million, there can only ever be 21 million. And there's 24 to 25 millionaires in the US alone. That means every millionaire cannot have one Bitcoin. So where can the price go? Well, we understand supply and demand. We understand that every millionaire, so millionaires can still afford it right now at $70,000 a coin.
Right.
There will be a time when they cannot because there's only 21. And in the US alone, there's 24 to 25 million millionaires.
Well, I certainly think it's going to create more millionaires. That's for sure. Just Bitcoin itself, right? But I just want to, for our listening audience, Daniel's calling it a coin because it's easy to call it that, and it's not a coin like what we talked about earlier. We might say that's a unit, $70,000 a full unit. Let's call it that. So technically speaking. We can call it coin for the fun of it, for when you're having conversations, that kind of thing. But for your listening audience, well, let's call it a full unit. Well, you're listening to Financial Strategies. The Andrew Daniel Agemy. This father-son team coming at you for Daniel in Denver and Andrew in Connecticut to be able to help you be able to understand and wrap your head around this a little bit more. And I'm ready to go buy some more, Daniel. So with that, we'd love to put this book in your hand that's going to help you understand it more. And it's called Inventing Bitcoin. And we love to be able to put this in your hands so that you can have access to that and be able to learn more about this so that you can learn more and do it. And we want you to be able to retire and stay retired. With the way that things are going and whatnot, you got to do something to be able to give yourself a little bit of hedge, a little bit of leg up on others. So call now for your free copy, Inventing Bitcoin, 800-725-7616 for the next 5 first-time callers, 800-725-7616. Remember, an educated retiree is a happy and stress-free retiree. We want you to retire and stay retired.